Hey everybody, Lawrence from financialthing.com here. How'd you like the new intro? Did I scare you? I have to keep you on your toes, right? Yeah, coming from the underground to the overground. It is, what date is it? Thursday, October the 2nd, 2025. Welcome to everybody. If you haven't joined, subscribe to the channel. Hit that thumbs up if you can. Helps us out a lot. Oh man, these financial markets are doing crazy things, right? Bubbly, frothy. People say frothy. People say it looks like 1999, the dot-com crash. Nonsense. It's not like 1999 at all. These companies that are pulling in profits are actually doing things, are actually really making proper profits. So it's not like 1999. Is it frothy? Yes, of course. But anyway, hope you're having a good week. We are going to talk about, what are we going to talk about? We're going to talk about cufflink today. Cufflink. By the way, it is a very balmy 20, is it 30 degrees? It's about 31 degrees here. Yeah, it's nice out today. Anyway. Yeah, we're going to talk about some cufflink news, some thoughts about cufflink, because I've been getting a lot of emails, a lot of questions, been doing a lot of reading. What do I think about cufflink? What's going on? What am I doing personally? I'll get to all of that. I'm going to show you the Trading 212 portfolio. I'm going to, what else are we going to talk about? Couple of a couple of other P2P lending bits and pieces, some stock market news, some Bitcoin news as we watch Bitcoin roar ahead to possible new highs this week, as predicted by many people, which I don't know how you can predict these types of things, but some people do seem to predict these things. Some are accurate, some are not. Anyway, quick hi to everybody out there. Chimpo Naughty is here, being naughty as usual, I'm sure. Paul Bagworth and Kenilworth, Peter Vincent Leatherhead, Paul New and Stockpoint, who is also watching Bitcoin shoot up. Amazing, huh? Amazing. David Dawson, Mr. Dividend himself is here, and Stephen Hale in Nottingham. Welcome if you're watching in the future or in the past. Not live anyway. Yeah, welcome. Tune in live, usually on a Thursday, 7:30 p.m. Oh, one other thing, just a little bit of housekeeping. I told you that Mr. Fourthway Neil Faulkner is going to be here on the 19th. We had to push that back a week due to a conflict that I had that I unfortunately cannot change. So we're going to be doing that the following week, the 20, what is that date? Let me look at the calendar so I can give you the correct information. I think it's the 23rd. Yeah, October the 23rd. Neil will be here live tuning in from Germany. So come check that out. Bring your questions. You have questions for Fourthway about peer-to-peer lending, or for Neil himself, or about anything. Yeah, come join. It's going to be a good conversation. Anyway, let's get right into it because we have a bit to get to tonight for you. It is, by the way, 2:34 in the PM here in sunny Florida. So let's get to it. What should we start with? Let's start with the alternative credit investor doing their little yearly awards that they do, which I always find very interesting. There's, again, not really very much news about peer-to-peer anymore on this website, but I still continue to be a subscriber. I get some value out of it. As long as they keep printing interesting articles, I'll be a subscriber. What do I care about on here? Well, the Credit Awards has 14 categories. Sorry. Yeah, does it? Does it have more than 14 categories? Maybe 14, but it said folk to folk. Right here, UK peer-to-peer lending platform folk to folk is on the short list in 5 different categories. So we'll find out Who wins what? On Wednesday, the 19th of November. I think they're doing these awards in New York too this year, which is interesting. So good for Susie. By the way, if you haven't checked out the interview with Susie from Alternative Credit Investor, you should check that out. Where is my camera gone? Hang on. Wait. Hold on. I know it's here somewhere. There we go. Okay. So there you go. Lend Invest, which I'm still locked out of at the moment because I didn't put down a UK mobile phone number, and now I can't get in my account, but hopefully I will be able to get in soon. One thing I will say about Lend Invest, a bit of an L for them with their customer support, because I called the phone number twice this morning, was on a very, very long hold, didn't get a hold of anybody. Not great, not good phone support, so I sent an email and said, hey, I need to get back in my account. Can you help me? I don't know if I've gotten an email back so far. I don't think so. So let's see how long that takes. Anyway, look at that monthly Lend Invest fact sheet. Number of investments posted. This is for August 2025. 6 investments. Average amount of the investments, 127,000 British pounds. Average return offers, not bad, 7.5% per year, with an average loan to value of 57%. And as I'm sure you've seen, interest rates have been dropping. Bank interest rates are really starting to get low now. I think I got a email from, let's see, let me show you, just so you can see Saga, which is Marcus and Saga are the same company. Marcus Bank used to offer really nice rates. Right now, current 3.44% gross is what you can get on an easy access account. They are dropping that to 3.19. So these numbers right now are actually, these interest rate numbers are getting really gross. This says 3.19% gross. But they're not great. I mean, this is starting to get close to inflation numbers, actually lower than inflation numbers if you believe the real truth about inflation. That's much higher than what we get told through the government. But now you're starting to get to those percentage numbers where savings accounts are really not making a lot of sense. You need to get your money out of fiat currency and put it into an investment because, you know, these 3.19% numbers are just not going to get it done. And that number is going to continue to go lower. I think you might be in the low, very, very low threes, maybe in high twos in some of these bank savings accounts by the end of 2025. So 7.5% on Lend Invest doesn't look too bad. Let's see where these investments were made. We got one in the south, a couple here, a couple up in Scotland. So not a huge amount of live investments going, but pretty good. And one other thing, which I think is really positive news, we've seen that the on schedules now are 80% and in arrears out of term 8 loans, so 8% and only 4% in enforcement. So we've seen those numbers start to come down a little bit on the problematic loans. One thing I do like about Lend Invest is if you look at these average investment amounts that went out this month, they're small, relatively small. So if they do have a problem with one of these loans, it's not like a £2-3 million loan. It's a relatively small one, kind of like Loan Pad, you know, where they keep their loans to manageable amounts in most cases. So if they do have an issue, they're not going to get hit too hard. And Lend Invest doing that this month too with their investments. Should we read through the, what is this? The House Martin update. This was sent out a couple of days ago. They've launched 203 Hill Farm Avenue, a 3-bedroom detached bungalow in Warwickshire, 7.3% net yield, fully inflation linked. So good. They continue to release new properties. Inflation held steady at 3.8%. Think about that. 3.8%. It's a scary number. It's a scary number. If you have $100,000 in cash, 1 year later you're going to have $3,800 £1,000 less. And by the way, I got an email, a question about that, about savings accounts. So it kind of ties into that. But anyway, 7.3% looks a hell of a lot better than 3.8%. 3.19%, you're getting 3.3% in the savings account. Let's see. Structural pressures in the UK rental market continue to intensify. The latest RIC survey shows that rental listings fell at the fastest pace since the first COVID lockdown. As landlords continue to exit the market in response to tax and regulatory pressures, with fewer properties available to rent, we expect upward pressures on rent to persist, providing continued support for the returns generated by the platform. I can speak as a landlord, somebody that did own shares in an investment property in rentals in the UK. The numbers suck. They suck. Now, if you're in certain pockets of the UK and Ireland, yes, you can make better yield, but in some places where I was invested, they suck. So, using a company like Housemartin to deploy funds be a lot less headaches, and you can get better yield than even being a landlord, putting up all that money and all that risk. Platform updates. This month we rolled out an interactive user guide across the platform. This tool is designed to walk you through key features, pages, and actions on Housemartin, helping you get more out of the account. It's currently available on the desktop, can be found in the bottom right-hand corner of the site. I have never used it. Shall I log in and see Housemartin peer-to-peer? Let me see if I can access my account. I'm going to take a look at this new interactive feature tool. Let's see if it works. Can we get in? All right. You can see my account is at a non-healthy £0 because I have not put any money into Housemartin's investment products yet. Okay. Where is Explore How? Okay, right here on the right, bottom right. You can't see it because it's covered up by my face. Can I move it? No. Let me turn off my camera. You don't want to see my face anyways. Look at that. Okay. And let me go here. There we go. Okay. Start site overview. Click here. Ah, look at this. Start tour. Use the main menu to navigate. Okay. Dashboard. Personalized summary. The exchange where you can view all the properties listed. Live investments here. Your investments. Okay, cool. So, yeah, this is cool because if you are a first-time user of a platform and you log in and see this, it could be pretty confusing. But see what the interactive learn about a property. Explore details. Look at this. Current price. Purchase price. Fixed cost contingencies. Yeah, I like it. Very good job, Housemartin. I dig that. It's nice when you get some intuitive, is that the right word? I don't know if that's the right word. Some intuitive ways to learn new platform websites. I dig it. I dig it. Let's go on. Continue. They've recently launched a brand new stamp duty calculator, which makes it easy to work out what you'll pay on any UK property purchase. Fully customizable based on your ownership status, residency, and whether it's a first or additional property. Yes, stamp duty is a pain in the ass. Arse. Very expensive. We've also published a detailed guide to accompany it. For those looking to automate their portfolio growth, we've released a blog on how to automatically reinvest income on the exchange. This feature is available and allows you to build long-term returns with minimal friction. They got updates on the property pipeline here and some updates on existing properties. Now, there you go. I always enjoy, even though I'm not an investor through Housemartin, I feel like they're doing all the right things to be a very, very solid peer-to-peer lending company. Okay, here we had a money thing for all those unfortunate people who are invested in money thing, myself included. Notice to lenders, I write to inform you. And this, by the way, this came one day, and I don't know if there was another email in the past that I missed, but this one came one day before this happened, which is I think, silly. But rising to inform you that the lending platform will be taken offline on the 30th of September 2025, and consequently, the platform will move to an offline solution to process further distributions to the lenders from this date. Please note the current moneything.com mailbox and contact phone number will no longer be available. Lender withdrawals will continue to be processed, and lenders can request withdrawal by emailing the below MoneyThing inbox with their username and banking info. I would encourage you to log on to the platform to request withdrawal of any remaining balances, download relevant documents, and ensure that you contact and your banking details are up to date. So now if you want to get a hold of them, you got to do it through MoneyThing at morefieldscr.com. I just think this is a really strange move because you don't have access to your account anymore. So big questions there. And I don't know, maybe somebody else who's smarter than me knows the answers to this, but how are you going to track things in future? Are we relying on Morefields to send a email to say, you have a balance of £100 in your account. Would you like to withdraw it? Are they going to do that for every single person? I think not. So how are you going to keep up to date with this as the administration moves forward? Really, really head scratching. Obviously done as a way to save money because nobody wants to keep up with this MoneyThing website, probably the IT situation. I have no idea. But it's just a really, really odd situation. I'm actually going to email Morefields and find out, what do we do in the future? How do we keep track of what the heck's going on of the details of our accounts? Head scratcher. So I got an email that, and this is one of, I think, about 10 in the last week. Hi, Lawrence. How's it going? What do you think about Cufflink? Still a fan? ? I'm not. BW Pauline. Okay. Obviously, Cufflink had some changes. And, they're very abruptly dropped on people, the changes that happened. We spoke about it last week. So I'm not going to go heavy into the details on what those changes are, because if you're a Cufflink investor, you already know. But one of the biggest changes that people had a big problem about was the 5% first loss that was no longer being partaken in by Cufflink. So off the record, I had a chat with the old CEO of Cufflink, who's on to bigger and better things. And we talked about this. And I think one of the changes of the 5% rule was put into place because of the FCA. I think the FCA had something to do with that. But I also think, and fourth way, credit to them, they did an update on what they thought about Cufflink and what was going on over there. And it was kind of the same thoughts I had, that some of the big loans that they've written prior to, I think, 2021 have run into problems. So we have a higher than normal default rate at Cufflink. 43%, I think, now is the default rate. We can go into Cufflink and kind of look at that. But am I still a fan? I would say I'm very, very, very neutral at this point. And I started drawing down from Cufflink when Narinder was relieved of his duties as CEO, because one thing about peer-to-peer lending, it's not like the stock market, okay? The stock market, you can get a really sense of FOMO, right? Fear of missing out. If you don't buy a stock at a certain price, you could miss that uptick. Case in point, I don't know, recent Tesla movement, recent Robinhood movement, blah, blah, blah. But with peer-to-peer lending, if you don't feel comfortable in things that are going on, you can sit on the sidelines for a period of time that makes you comfortable and wait and see what happens. Or worst thing you're going to be missing out on is, 6, 7, 8%, right? You're not going to be missing out on 2xing your money, 3xing your money like you could in the stock. So I always tell people, yes, if you're not comfortable, sit out. If you have to sit out for a year, you can find other places to put your money. But sit out and wait and see what happens. And that's why I say I'm neutral right now, because I logged into Cufflink's website and I wanted to look at these defaults and what was going on. Look, I don't know the ins and outs of every single one of these defaults because I just simply don't have time, and I'm not super invested in Cufflink anymore. By the way, if you want to look at the defaults, when you log into your account, you can go into select loans and then click on funded. And then you can type in this search bar up here. Hopefully you can see that. I'll zoom in. See this search bar right here? You can put in default. And it's going to show you a list of all the defaulted loans that exist on the platform. And I just went all the way down to the bottom because I wanted to see the oldest loans, right? We have 120 loans. So let's go to the last one. So you can see here, this one, right, is North Cross Road. I'm not sure when this loan was written. Let's have a look. Loan information. So this one is, actually this is not the oldest, this is 2024, but you could see here, where is the, I thought it told me how much the loan was for. 423,000. Yeah, 423,000. So not a huge one there. Let's go ahead and see. I wanted to see if I could find some of the older ones. I'm not sure how they list these. I don't think are they listing it by? See if they are listing it by age. Let's go to the first one. See how old that one is. Original loan end date 2024. See, this one is quite a big development. It's this gross to value development of 1.7 million pounds. This tranche was 59,000. Let's see loan information. How much did they borrow total? I don't know. Yeah, so the tranche is 59,700. I want to see where am I missing total borrowing amount? See, this is not very clear because it shows you how much has been lent in the tranche. It shows you how much the gross development amount is, but I'm not seeing how much total was borrowed here. But let's see, that's tranche one. So multiple tranches of that loan. So you got all these properties that are in default. I think I saw one of them up to tranche 16. So here you go, tranche 17 on this one. Yarmouth Road, right? This is tranche 17. Our loan, look at this, our loan will total 3.521 million pounds. This is a big loan. You know, if you have I don't know how much that total loan book right now is, 105 or something like that, maybe more than that. But 3.5 million is quite a large number. This is why, I say this is a good time sometimes to sit on the sidelines and just see what the recovery is like on a loan like this, because some of the loans that are in default are pretty large loans, and that is where you start to get concerned when it comes to a peer-to-peer lending platform. A company like LoanPad keeps their loans to a sizable chunk, so if one of them goes bad, it doesn't affect the portfolio in a really bad way. You start taking out big loans, 3.5 million, one of these loans goes into default, now you got a problem on your hands. Not to say that this loan can't be recovered, because maybe it can. We can see here the updates, July 11th, 2025. Further to our last update, our contractor continues to make good progress with the top floor of the building. So it's continuing to be finished off. So who knows, maybe this one will be okay. But this is obviously, when you see rising defaults, 43% of the portfolio, default. We got a piece of land here. That's never really a good thing, right? We've seen it on crowd property too, and I've said the same thing, that whenever I see defaults start to rise, what I do is start backing off from the platform and just sit on the sidelines. see what happens, because there's no point in taking unnecessary risk. Now, in some cases, you're already invested and there's nothing you could do. You have to sit in these loans and wait. And this is number one. Most important thing is why you have to diversify. Not put too much money into any one loan. Even if you think it's the greatest loan in the world, you go heavy into one loan, don't diversify. That's how you get yourself in trouble. So, answer to that email, am I still a fan? I would say I'm a neutral person right now. I'm not really a fan now. I'm not necessarily against them, but I'm sitting on the sidelines waiting to see what happens. I've read some interesting posts on the P2P Independent Forum about people are not particularly happy. This is a good post right here by P2P Skeptic. I almost said septic. My main complaint is the fact Cufflink have forced their new terms onto me, applied them retrospectively, and not given me any option to decline. You can decline, but if you do, you're going to probably take a haircut on your investment. I have no problem with them changing their terms, but they must only apply from a certain date. Forcibly applying to all existing investments is not on, and not being able to decline the changes is also wrong. They've basically forced everyone to accept changes whether they want to or not. There is no option to close your account and withdraw if you don't want to accept the changes. You and all your investments are trapped into whatever they say. There is no take it or leave it. You have no choice but to take it. The second point of my complaint is they knowingly invested my funds into already defaulted loans that will be on the auto invest, and now say I potentially won't get my capital back from them. How is that legal? What if you went to Curry's and bought a new washing machine? How easy you find out later that they had deliberately sold you a broken machine and now refuse to give you your money back? Would that be okay? As to what I want, either return my capital plus accrued interest or allow my current investments to continue as per the terms I agreed upon when I started them. Nothing much. Just want to be treated fairly as per FCA guidelines. I think this is a really, really great post, and I think that Cufflink has made a big cock up when they forcibly put these changes onto people and did not do it on loans moving forward on those terms and conditions, if I'm understanding this correctly. This is what makes me a Cufflink neutral person right now. And, to be honest, I think I may have to take them off the top 5 list because of this. When Narinder left Cufflink, I felt like things were a little odd. I couldn't quite put my finger on it, and then this happened. I've had some conversation with Narinder again. I can't really disclose what we spoke about, but he mentioned some things that made me really open my eyes and say, best just to sit back and see how things play out. But forcibly putting things on people is never a good thing. It's better to introduce things in advance to say, look, this is going to happen. How do you feel about this? Because once you alienate your investors, you got a big problem on your hands. So take note, other peer-to-peer lending companies. And there, another thing, there's really not a lot of stuff on the secondary market. Let's see what's on the marketplace. So people are not panicking. I think if you saw people panicking, there would be a lot of loans here. But then again, if 43% of the loans are in default, you might not see much action on the secondary market. So that's my thoughts on Cufflink. What do you think? Were you guys happy, unhappy with Cufflink? I think I know what the answer is going to be. Let's take a look at the Trading 212 portfolio. We have hit new territories this week, eclipsing that £30,000 number that I've been trying hard to get to. We are almost at our high here, June 30th of 2025. We hit a high of 30,389. We got a little bit closer to there this week. So it's been a good week. I did make a couple of changes to the portfolio. Let me show you what's going on. NVIDIA just continues to be a powerhouse in tech. And again, just disclaimer, do not follow what I do. This is not financial advice. I'm just a dumb bozo on the bus, as they say in America, taking shots at things to see if it works. Some of it did. The stock market plays ball. and is nice, it'll work. If it doesn't, I could certainly hit some hard times with this. And the goal of giving away profits to charity at the end of the year. NVIDIA, we are up a whopping 86%, and that eclipsed its all-time high of $190 today. So we're 86% up on that position now. That is gone over 7,500 pounds. Strategy, we were in the red on strategy. Yeah, look, we had a rough month with strategy, going all the way down to 300. Isn't that amazing how quickly things can rebound? Back now to 350 as Bitcoin starts to rage on. I have again about 7,000, almost 400 pounds of the 30 grand in strategy. Now I did reduce the holdings on the Vanguard S&P 500. What I did is use that as a place to hold money. Well, I wasn't really sure what the next move was going to be, so I've reduced some of that now. I think it was at 8,000. Now we're down to 4,600 on that, but we're still up almost 14%. I mean, what a crazy ride we've had last. Look at this. From this dip in April, where this Vanguard S&P 500 ETF was down at 76 pounds, is now rebounded all the way 20 pounds more. So what is that, 30%? That's crazy. It's 30% from April to now. So up 13%, almost 14%. Amazon, slow and steady race, right? 18% in the green. Tesla having an odd day because they released their third quarter deliveries that absolutely smashed it, right? 497,000 cars delivered. Deploying 12.5 gigawatts of energy storage products. So they're having an amazing quarter three, and yet the stock declines almost 3.6% today. I mean, Tesla to me is kind of a no-brainer in some ways, especially since I did purchase a car from Tesla in July. And I will say, best car I've ever owned by far. Is it perfect? No, absolutely not. But when you have a car that just gives you updates and adds features to it every time they update the car, how could you not like something like that? And this is where I see globally that Tesla is going to continue to produce more and more good results. And then they have other products. I mean, just their autonomous driving that maybe will come to light in the next, 2 or 3 years. Who knows? We'll see. I think it'll happen quickly. And in the US, it costs $100 US a month to subscribe to Tesla's full self-driving. I have it on my car. It's amazing. The car will drive itself pretty much 95% of the time. It's a terrific product. They're going to do that globally, and they're just going to make a ton of money. That's these subscription services that these companies put out now are where the real revenue is. Like, look at Netflix, look at Amazon, AWS. Tesla's the same. Anyway, we're up almost 20% on that position. Iron, this was the data center company that's kind of been the talk of the internet, so I hopped on board, did a little bit of research, nothing too in-depth. So bought some more of those recently. So now we've got about 2,900 pounds. We're up a little bit on that. And then Robinhood. I opened a Robinhood position today. Really, really late to this. And usually I don't like buying shares when they're at that high, but I'm just reading so much on Robinhood. If you don't know what Robinhood is, it's a U.S. Stock trading platform that most people are using on their phones. It's super intuitive, really easy to use, and young generation, this is all they use. Younger generation people in the United States are not using any other platforms unless it's for their work pensions than Robinhood. I wouldn't say they're not using any other, but Robinhood has a huge market share on trading. You can now short the markets. You can play options on Robinhood. You can buy stocks. You can have your retirement accounts in there. They offer really great products. Do I trust them? No, I don't trust them myself to have an investment account through them because of some stuff they pulled, a couple of years ago. But other people love them. The young people love them. And I think they're just going to continue to roar ahead with their profits. So kind of seems like another no-brainer for the portfolio. If you look here, a low in March of 34 US dollars. So this stock is 4x, and I think it has room to hit probably maybe 200 by the end of the year. We'll see. That's the gamble of stock investing. So that was added to the portfolio, and I think with this Vanguard S&P 500 fund, I'll continue to reduce that and allocate into these positions to take advantage of what is obviously a bull run now in the stock market. And if you're sitting on the sidelines in cash, you really probably you've missed out. I mean, look at this NVIDIA run up the last 3 months to a year right here from its low of 94. It's gone up nearly $100 since March 31st. So anyway, the portfolio is motoring along. We'll see what happens with that. Moving on, let's talk a little bit of cryptocurrency, because how can you ignore it at this point? If you are ignoring Bitcoin at this point, I don't know what to tell you. All the signs are pointing to global adoption of Bitcoin, right? You can see here, generally, if you look at this statistic of average crypto relative strength index, which is really overbought, which means people are buying. Anyway, Bitcoin now is sitting at 120,866 US dollars. We have had a big run up 7 days from, we were down in the 108,000 at one point, now up to 120,000. And you just have things like this coming out that, I mean, I don't know what else people need to see. When you see news stories like this, Swedish lawmakers propose national Bitcoin reserve. 2 members of the Sweden Democrats have submitted a motion urging the government to examine whether Bitcoin should be used as a national reserve, because they understand that inflation is eating cash away. So is this going to happen in Sweden? I don't know. But it is a disruptive shift in the global financial infrastructure. It's happening. So this is an interesting story. What happens if you give people cash in crypto? This is really stupid. I read this and I just thought, really? This is just crazy. A new basic income pilot will pay low-income New Yorkers $12,000 in cryptocurrency to help them invest in big expenses like education and housing. A new initiative is giving 160 low-income New Yorkers $12,000 over 5 months. Handouts, yeah? Isn't that how we got in trouble? Giving people handouts and bailouts. This is, by the way, a no strings attached. And it's to study whether it can alleviate poverty and improve quality of life. What, giving people money, is that going to alleviate poverty? I'm all about helping people, but I think just giving people cash is kind of ridiculous. You've got to educate people and, whatever. I guess it is what it is. If you're a recipient of that, good luck to you. Quick chart, speaking of Bitcoin. This is Bitcoin returns 2010 to 2025. It started in the year 2010. We've had 3 years out of 15 where we've posted a negative year end versus year start return on Bitcoin. So this year we're at 27% year to date. So this is one of the lowest green years that we've had, but we still got another couple of months till the end of the year, 3 months. So I think this number is going to be higher. We'll see. Yeah, but so if you're looking for some kind of history on a new investment product, you've got 3 out of 15 years have been in the red. The worst year, 73% in the red. The best year, 9,900% in the green. I'll take those odds if I was a gambling man, wouldn't you? Let's see here. Got another investment question. Glad to see you back on YouTube again. Hi, Lawrence. I've been quietly watching for about 5 years. What's going on with P2P lending? It seems a bit dead. I've been adding to my Marcus savings account for about 6 years, and I've got quite a bit of cash, getting less than 4% interest. I'd really like to start investing a bit, but I'm afraid of making the wrong investment and losing it all. Have any advice, Kieran in Ireland? What is it about? Okay, I'm gonna make a stereotype here because I used to be this person myself. I used to be Kieran, absolutely, before I was 40 years old. I don't know how old Kieran is, but before I was 40, I was a complete scaredy cat when it came to investing. And I was heavy cash. I was like, let me just save as much cash as I can. I didn't understand anything about inflation. I was really dumb and financially illiterate. But I do see news stories about Brits and how they love to save in cash. And, you know, when I woke up in my early 40s and decided that cash is just not the way, you've got to put your cash to work. You got to take some risk if you're going to get ahead, unless you got some massive salary. And good luck to you. Most people don't. But cash in the UK, Brits, they love to save in cash. And I was just curious, and I don't know if the internet is going to tell me this, how much cash savings do British people have? Let's see if we can see it. So it says here the average savings 16,000. It's not as much as I thought. I thought it was going to be a lot more than that. Key statistics: 16% of UK adults have no savings. What does that mean? Does that mean they have investments and no cash? 39% of people have £1,000 or less in savings. 71% have some money in savings. 16,067 pounds in 2025, according to this survey. From what I've understood is that British people like to save a lot more cash and are more likely to be like Kieran and I was in my early 40s, where I was really afraid to invest. But this is a great chart. Kieran, if you're watching, I hope you get to see this. And I put a post on Twitter. By the way, if you don't follow me on X, follow me on X. I've been doing some more posting recently. Just Google financial thing on X. And I wrote a post this morning that said, nobody ever went broke buying the S&P 500 and holding it. And this is a great example of nobody going broke by just sitting on their hands. Even if you did it right back here in the 1980s and you just bought the S&P 500 and sat, did nothing, you were going to be fine. So it's a pretty easy piece of advice, is just buy an index fund or an index tracker, like the one we always speak about, the Vanguard US Equity Index Tracker, which you can find on Vanguard's website. Just buy it, sit and do nothing. Simple. And the question here says, I'm afraid of losing it all. The only time you can lose it all, and I don't know, I would say that you have 99% chance of not losing it all. You could say that maybe there's a 1% chance the stock market goes bankrupt or goes to zero. I think it's probably 0.00000 multiple 1% chance. Likely is never going to happen. It could, but I guess it happened in Germany, right? But chances are, if you buy a simple product that the only way you're going to lose all your money is if you do something like what I've been doing, trading 2-on-2, and you put all your money into iron, right, or some other super risky play, and the stock tanks. Yeah, you could lose all of your money. Sure, I've done it myself. I've lost everything that I had in Norseman Gold. Talked about that before. You can lose all of your money, but But if you invest in this Vanguard S&P 500 fund, for example, it's not going to go to zero and you're not going to lose all your money. You'll lose money if you get scared and sell when you shouldn't. Like right here, for example, you sold down here. I don't know if you can see that, but right here during this crater down, this was 2022. Yeah, you can lose your money, sure, but you're not going to lose it all because it didn't go all the way down to zero. It's still here, right, versus here. So you stick to that simple investing method. Don't get gambly. Don't do this. Don't do this, what I'm doing here. You're not gonna lose all your money. You will lose it if you let it sit in cash and it deflates by 4% a year, because in 10 years you'll have 40% less cash or more. More than that, less. That's how you can lose your money. Let's see what else. Oh, interesting article here on Forbes, going back to Mr. Bitcoin. It's happening so fast, crypto floodgates opening, predict to send Bitcoin price to $1 million US. Prices are ripping, blah, blah, blah. Bitcoin price is 10% up in a week. Traders brace for 2026 Bitcoin price earthquake. U.S. President Donald Trump's son, Eric, has said he expects the Bitcoin price to go to $1 million as crypto replaces the established financial industry. So all of these signs are right here. Could it be news fodder? Could be, sure. Could be. I don't think so, but you have to make your own determination. But all the signs are pointing to no, it's not. Yeah. What time is it? Okay, good. We got done quickly. Where is the time is it in the UK? 8:37 p.m. Anyway, let's see if you have any interesting comments. If you can hit that thumbs up, please. It does help the stream out a lot. Thanks for tuning in. Assets capital taking so long to get funds out, and the £1 charge to withdraw funds so annoying. I agree. You know what I do is I just wait. That's wait because I think they let you do it once every 3 months for free. I'm cheap like that. Dave Allard, cufflink seems to have upset lenders. Yes, I agree. I think they have. Hola, Annabelle in Spain. How are you doing? Nice to see you. Evening to you, Alan Stratford. Thanks for joining in. Assets capital is a drag. Yes, it is. Is anybody going to go to the Alternative Credit Investor Awards? Anybody got a ticket? Anybody going to go see Susie? I will not. Not because I wouldn't like to, just because that's a long trip to go for one evening. Certainly a backward step from Cufflink for investors, considering they're making a profit. Seems like they are being a touch greedy. Yep. Although Chimpo Naughty says Cufflink changes make sense from an overdue reality instead of no defaults, no losses fantasy. Interesting take. Yeah, I think a lot of people's trouble with it is how abruptly it was just dropped on people. It wasn't, there wasn't even an email coming that says, hey, you might see these changes in the future, or hop on the independent forum with a representative and put that discussion out there so people don't get blindsided. Does FCA consider a conflict of interest for P2P platforms to have skin in the game? If so, how will that affect platforms, high net worth lending, and capital stackers? That's a really good point, and I do think you might start to see things changing with platforms. How they handle that. I personally don't really see it as a conflict of interest because I think it just shows if a platform believes in the loans and they want to put their own money in, why not? And that would give them more incentive to make sure that those loans are repaid and don't go into default. So, but the FCA is crazy and they may see things in a different light. We'll see. SG 1090, unhappy with Cufflink, slowly reducing for now. That LTV for returns can be beaten elsewhere by a small margin too. And I think Cufflink, the other issue is the defaults on the big loans, like Fourth Way also described. That's more of a problem than changing terms and conditions, even though I think the changes in terms and conditions not great too. How can Cufflink offer a higher auto invest rate than any loans that have come through recently? I guess a mix of older loans in there too that pay better interest rates. That's how. Plus maybe they, if you give up a percent, say you give people an extra 1% as a bonus, it's a customer acquisition play, isn't it? It's like paying for advertising, right? You got to pay Google Ads thousands of pounds a month, and Google Ads try to acquire new customers and get more money in. Instead, you're saying, I'm going to give a better, higher percentage on auto lend, which not everybody doesn't use that, but it's a way to acquire money and I would say cost of doing business, right? Maybe they can afford to do it if they're making profits on the loans in other ways. Fourth Way completely missed the point on Cufflink's unfair treatment of existing auto investments. Too complex to fit in these comments. See P2P Independent Forum. Yeah, I think that was what the person I read their comment point was making is you're backtracking now. You're saying everything going back is now covered under these new terms and conditions, instead of saying from this date forward, any new loans will be covered under these terms and conditions. I 100% agree with that. Oh, I love this. I always tell my kids keeping cash in the bank is what pays for the banker's suits. That's great. Well done. Okay. Thank you very much. That is going to do it. We're going to get out of here. Hit that thumbs up if you haven't already. Please subscribe. Tell your friends and family about what we're doing here on the website and the live stream. I'll be back hopefully next Thursday. And don't forget, pencil in October 23rd. Fourth Ways, Neil Faulkner will be here live from Germany on the stream. Looking forward to it. Have a great evening, everybody. Have a great weekend. And I will see you next time. Take care.